currencies, properties. See, we have discussed about stocks, bonds, currencies, and if I talk about properties, properties is very common. Very common, it means very common asset. Everyone is holding some sort of uh, property like land, open land, plots, flats, right? So that would be your collateral basically. And if I talk about metal, so let's say the platinum, then gold, silver, steel, that all comes under the metal. And if I talk about commodities, your commodities can be there are two types of commodities, okay? Hard and soft. Basically, the the processing oil and all of that you can treat as a hard commodities, but the cotton, jute, soybean and all of that, or beans basically, you can treat them as a hard commodities, because those commodities require processing to uh, get the final output, I would say, right? But yeah, so in short, so if I talk about collateral, it means you can say it's an asset. All right. And if we talk about assets, so we have different asset classes. So what are those? Those are like bonds, equity, property, then metals and all of that, or currencies. So that all asset classes you can treat as a collateral. So now the most important question would be, sir, why we treat them as a collateral? See, in short, as I said, collateral means your assets. See, anything if you have, right, and if that things, let's say, if you see, the economic value, and the same, let's say, it could be goods or it could be, let's say, item. If that item offer you, let's say, the appreciation in value, or could be the economic benefit from it in future, so those things you can directly call it as assets. Okay, so sometime you may see questions around like what is the difference between goods and assets. Let me differentiate. Any asset if you hold in your account or with you for a resale purpose within a specified time frame, which is, let's say, within a 1 year, then all those assets you can treat as a goods. All right, or I would say every asset would be goods from the first, for first year, I would say, right? Every asset would be goods for a first year. So once the first year, cross, then you can call it as an asset basically. Why? Because the goods will have a fully purpose of resell and generate profit out of it, but the assets will have a purpose to hold, to enjoy the economic benefit, could be dividend, capital appreciation, interest payment, right? And maybe after a few years you can sell it out, the same assets in market. So that's how you can differentiate goods and assets. Okay, but from a accounting perspective, as you know, that goods we treat as a current assets, and the assets we treat as a long term holding. Okay, that's how you can differentiate the assets and goods. But here we are talking about assets only, or even you can say goods as well, but depends in which situation that you are and how you are treating that particular items, whether it is a goods or assets. Okay, but for understanding purpose you can treat as assets only. So now if I talk about what we gonna do with, the stocks, bonds, currencies, properties and all of that. See, in a finance, guys, what happened? Let's take a hypothetical example, okay? Very hypothetical example. You have Wipro stocks, all right? Wipro stocks with uh, thousands QT quantities, and you are holding them, means you have fully paid amount, you are holding that, so it's your asset. Up to certain period, what happened, you are in a need of money, so you need some liquidity, let's say 1 lakh rupees. You approach to your friend, you ask for a help, so he did not. Then you approach to the bank, then bank simply asked you, hey, are you salaried? You said no. Then bank said, sorry, we can't offer you personal loan to the someone who is jobless. Then you approach to me, let's say, hey, hi Shiv, I'm in a financial trouble, so I'm looking for 1 lakh rupees credit, so can you help me? Okay, then I said, fine, I'll help you for that, but I need some collateral. Okay, why? Because I can't directly trust on you. If something, let's say, maybe I can tell the another story like, look, I have lent money to the couple of friends or the other people, and now they are not repaying on time. So I don't want to take a risk. So do one thing. If you have a collateral, it could be gold, bonds, currencies, properties, metals. It could be anything. So if you have a collateral, then let me know. I'm happy to transfer you or lend, let's say, 1 lakh rupees to you on collateral. Okay, then you realize that, okay, so you are holding thousands quantities in your account, Wipro quantities. Then you simply, let's say, call me, hey, look, I'm holding 1,000 quantities of Wipro. Now you tell me what to do next. Then I'll guide you for that. Look, what you can do, if you have a quantities, check the current price. Let's say current price, which is 250, assume it. Let me take it all of these details in Excel, so it would be easy for a calculation. Okay, so stock name, then QTY, current market price, Wipro 1,000 quantities, and price which is 250. Or else you can consider the current price also. So let me check current price just to have a better understanding on it, how collateral works. Wipro share price. So 240, okay, 242.01. 240.01. So now if I talk about your total asset value, what you have, just simply multiply it and this one. So almost you're holding the assets of 2,40,000. See, again, your question would be, sir, instead of transferring this Wipro stocks to you, I can sell it in market as well. See, if you want to sell it in market, you can. Then you don't need to collateral, means collateralize assets. You can simply sell it out your assets to someone else and get the money. So in that case, your collateral would be again the stocks. Sorry, because my nose is today, I have cold, so I'm not able to breathe properly. So sometime you would see pause in the session. Okay, all right. So if you want to sell it out, simply then you can transfer your collateral to the buyer and take the money, and that's what, I mean, you can close the deal then, right? But the second case would be, let's say you don't want to sell. The reason is, could be you're looking for a long term, right, the investment, and that's what you have invested. So you don't want to take a exit from this particular stocks at the moment. Might be, let's say you have done some sort of research, and your research says, look, if you hold these assets for next 6 months, might be stock price may reach to the 300 or 400 or 500, so and so forth. Reason, it could be anything, because we cannot say, okay, look, reason would be this, reason would be that, reason will be this. No, means surely we cannot tell, because see, in every case you would see different story or strategy. All right. How, I'll explain that as well. So now, look, in your case, let's say you're Mr. A. You're Mr. A. See, you have an asset or collateral with a value of 2,40,000. You have approached to me. Let's say this is my account, or else what I'll do, yeah, you have approached to me and presented same look, you you know, with the same storyline, like you're holding Wipro stocks with 1,000 quantities, and with, you know, this and this price. So total worth is somewhere around 2,40,000, and you're looking for 1 lakh cash on it. Okay, then what I'll do, I'll simply ask you to do one thing. Reach out to the let's say, mm-hmm, what is happening here? Oops. Okay, leave it. This Google set is little hectic, so I don't want to waste time. Let's say I can ask you to, you know, reach out to the broker, stock broker, who is dealing in a stock market. I can ask you to look, you can reach out to the broker, let's say ICICI Direct, right? Then you can reach out to the broker. You can tell the same story to the broker. Look, I want funding of 1 lakh for the immediate, you know, financial needs, and you have a collateral of Wipro stocks, and you're ready to place it, or you're ready to, let's say, surrender your assets, maybe for a 60 days, 1 month, 2 months, 1 year. So depends on your need, right? Then what you can do here, once you approach to the broker, so you can tell your funding need as well, let's say 1 lakh in your case, right? Then broker will do some, the basic check, your track record, previous track record, your asset quality, means collateral quality, is it a worth or not. So broker will check everything. Everything means everything. And broker will, you know, after doing some market research or understanding your collateral position, what broker will do, let's say current market price of collateral is 240, then the broker will come up with, look, so for us the 240 is more valued, so how we, let's say, consider it, the fair value of security, which is uh, which is 150 for per share, right? And total quantities which you have is 1,000. So the max to max funding that we can offer to you, which is 1,50,000, not, right? So as you said, you are looking for only 1 lakh, so you can withdraw 1 lakh, which is absolutely fine. But on the basis of valuation of your securities, we can offer you 1 lakh 50,000 max funding to you. But if in case, let's say, if this price, current market price, if this goes up, increase, let's say from 242, it reached to the 300, then so might be you can see your security price should be somewhere around 210 for us. So then your borrowing limit would be around 2,10,000 that you can max, uh, which is borrow from this particular collateral. That's how we can provide to you. And see, nobody offer anything free of cost, right? Then the broker will say, look, apart from this, will also charge you 12% the interest, which is 12% for per annum to you. 12% for per annum. Okay. So every month your interest will be calculated on the basis of the borrowed amount. If the borrowed amount is, let's say, 1 lakh, then interest will be calculated on 1 lakh, right? But this is how you can see, the data looks like. Okay, let's say you're agreed with terms, and at that time price was, let's say, the 50, and you have decided to withdraw. Then your borrowing amount come into picture. Which is 1 lakh. Period, let's say for 30 days, you have decided to apply for a loans for 30 days, right? And if I calculate the interest for 30 days into 12% divide with 100 into 30 days divided with 360. Oops. $120 this looks wrong. I don't know how it is taking, but it should like this 12,000. Okay. And if I calculate, let's say, interest for day wise, for per day, interest amount divide with 360 days, so 33.33 would be for per day. So total days we have into 30 days, which is 1,000 rupees. So for per month, right, broker will charge 1,000 rupees on 1 lakh borrowing amount to the borrower, because technically, if you see in this case, you are the borrower, right? Then again, the very important is, see, borrower first discuss these terms. These are the terms. Borrower only discuss these terms to you, and if you are agreed with this, then borrower goes to the, let's say, lender, or borrower may come to me, or maybe you can come to me and then I'll include borrower, so vice versa. Let's say borrower now, this ICICI Direct Securities, people, they come to me and said, look sir, we have one request, the borrower is ready to pay this and this, and we'll hold the collateral on behalf of you. So what you need to do is just transfer 1 lakh, and we'll pay you interest payment for that as well. So that's how the deal would be. Then what I'll do, okay, so I'll calculate the value, fair value, in my account as well, just to ensure whatever let's say broker said. So Agree with that amount. Okay, so your asset value is 1,50,000. So what I can do now, max to max, let's say offer up to 1 lakhs. Lender lending amount is 1 lakh with interest payment. See here, interest rate, it could be even 10% also, lower side. Now ask me question why? Because why borrower will help to the borrower and lender? Sorry, why broker ICICI Direct will help to Mr. A and Shivraj? Why? Ask this question. Why broker will see, broker it means it's an intermediate person, and broker will always try to make money out of it. Maybe broker can charge commission fees, upfront fees, and apart from that broker can try to generate the income from the interest rates as well. How? I'll calculate that percentage as well. See, broker can convince to me, hey Shiv, we have request for a 1 lakh, you can give, just if you can give 1 lakh to us, we'll pay you, let's say 10% interest income to you, right, yearly basis. So for per month, so almost you can earn like, let's say, if I calculate d wise, which is 10,000, right? And if I calculate day wise, just simply divide with 365 days. So this would be per day's value, per day interest. And for 30 days would be 27 into the days which are, sorry, where the 30 days. All right. Accrued interest. Okay, so this is how you can see the terms in the particular trade. Okay, now try to understand, guys, the collateral position. Collateral position in a first scenario, the original owner of the collateral is Mr. A, original owner, but just due to, let's say, funding need, this person like Mr. A will transfer the securities to whom? To the, the ICICI Direct under escrow account. So what is this escrow account? Escrow is just an arrangement of facility where, the counterparties like buyer, seller, or brokers, they park the assets or cash in the account for a protection purpose to, get the verification done of counterparties. And once the verification is done, funding is received, then only brokers or clearing agent basically they'll, settle they settle the payment, stock and cash payment in the party's account. So escrow account is the facility, in short, I would say, which is created for a completion of trades, right? So see, just think for a while. You are in Pune, I'm in Delhi, and we both have decided to buy and sell something. And let's say you have transferred me 1 crore in advance, and after that, now I'm not picking your phone, or I'm not even responding to your emails. Just think what will happen to you. So you can see huge risk in that trade, correct? But in a finance market, so there is a term called escrow account. So escrow, it means, so simply both the parties can open the account with bank or any financial institution who want to work as a escrow agent, and escrow agent will hold the assets or cash payment on behalf of both the parties, so they don't need to worry about settlement. So escrow agent will take care of it, the settlement part. All right. So in that case, both the parties can neutralize their risk. Both the parties can neutralize their risk. All right. So this guy basically means borrower will place securities with ICICI Direct, like 1,000 securities, and withdraw the 1 lakh amount at 12% interest rate. So once the, let's say, fund received to the A, then immediately broker block the securities in the borrower's account. So borrowers cannot access that securities or cannot even sell it out to others. So that process will call it as a block. So broker will block that securities. All right, and simply send the notifications to the lender, because the actually lender is Shivraj, so 1 lakh amount will be debited from the my account. So same amount will be blocked in my account as well, and even transferred to the borrower. Then meanwhile, if you see, where is the collateral, right? So let's say this trade was happened on Friday, and we are reconciling the details here in the account of borrower and lender, even in broker. So now we want to understand, let's say, position of collateral. So where is collateral in this particular situation? Where do you see the collateral? Of course, collateral would be under broker. So broker will take care of it, right? So broker will monitor it. Broker will keep an eye on securities. If something happened, then broker can quickly sell it out securities in market. And how this happened? See, this particular loan transaction was executed on the 1st of May. It's again assumption. This was executed on 1st of May. The price of Wipro was 240, but so meanwhile what happened, like the Pakistan and the India, the war has escalated to the next level, and there is very high tension at a very geopolitical level, and that is, let's say, impact that have been impacting on, let's say, stock market, and the stock price, which has been dropped from 240 to 150, or let's say 100. Look at now, the loan amount and the lending amount both are at a very critical level. At a very critical level. See, if something happened again in the market, and if price goes beyond the, let's say, the loan amount at maybe 90 rupees, so you can see, even if I try to sell the securities in market as a lender in the market, I won't be able to recover my 1 lakh plus interest amount. Correct? So I won't be able to recover my amount. So now, so here the very important is, broker charge interest rates or charge commission or charge upfront fees for what? For what? For tracking of trades. So broker basically track these trades, right? So broker track this amount. Broker keep an eye on this amount. If the broker sees movement in the, let's say, this current market price, If any movement is in the current market price, then broker basically take the uh, you know quick action and sell it out position in market, or else broker first try to reach out to the borrower and ask borrower. So if I take this, the example, so broker ask borrower to immediately fund the account of around 10,000 as a margin quickly. Why? Because no matter what, the, your total collateral value, market value, it should not go, you know, below the 1 lakh. It should at least maintain, at least 1 lakh value in the market, because there is an obligation of 1 lakh rupees outstanding. So due to that, if something happened with, let's say, market price of your collateral, so that actually impact a lot. So I hope you get it. So that impact a lot. Then the lender, won't be able to recover the money if something happened. So that's what, if you see here, the 2% basically, the broker charge interest and make money out of it, or sometime broker directly charge payment as well, like upfront fees could be 1,500, 200, 300 for per lakh. So this directly charge and provide service to them, right? And if I talk about this, the margin portion, this should be the margin call. So in finance or in stock market, we'll call it as a margin call. So broker quickly notified to the borrower and ask borrower to fund your account. If the borrower, let's say, is not able to fund this account by any chance, and if they don't respond, then quickly ICICI Direct can sell the securities in market and reduce the risk. Not all securities, but depends on the, let's say, how much amount is short. So accordingly, maybe 100, 200 quantities can, the broker can directly sell it out in market. So I hope you get it. So how things works in the market, right? So now if I simply explain what is collateral, it means it's assets. So if you have assets, you can place that assets with broker and you can raise additional funding. So that process, you can call it as a collateralization. But in every normal trade, guys, you can see a collateral. Even if I talk about home loan, so property would be the collateral. If I talk about auto loan, the auto or the vehicle would be the collateral. If I talk about, let's say, term loan, the you own would be the the collateral in that particular process. If I talk about, let's say, any commodity contracts, let's say gold, so gold would be the collateral in that particular contract. But the movement of collateral from one account to another, the pattern would be remain same for across all the collaterals. If I talk about home loan, in a home loan, what happened? When home loan original buyer, let's say, signed a contract with the bank for a home loan and asked for a funding of up to 80% of property's value, then basically the bank actually asked for a legal rights, ownership rights to the property owner. And that's when property owner sign the collateral transfer, sell transfer rights with bank, and then only bank process funding to you. If something happened in market to your property, then bank can quickly sell out the property in market and recover their amount first. So that's how things works. All right. So I hope you get it. So what is collateral? But if I talk about your interview, so you may expect questions around like, hey, what is margin? Margin, it means it's basically shortfall amount. If you see any shortfall, right, during the trade live, then so that basically short amount you will have to fund to the account. So that amount you can call it as a margin. Margin call purely based on market price of securities. If market price changes, then your margin also it will changes. So let me try to access my other account to just quickly walk you through. yesterday due to this border escalation I was in a loss of 6 to 7,000 in one of the trade. Let me log in. My inbox is full, but just give me a moment because this OTP based solution. So it should now. Shit. I think need a password one more time. So before this it was just password driven, but now the OTP is required, and I think my inbox is full, so that's what I'm unable to log in this platform. But I would have walk you through how margin works. So let me see if I log in my another platform. Yeah. So if you see, due to India Pakistan war, hypertension situation, there was volatility in the market. So I had couple of open trades in my account. Look at this, 4,90,000 amount which is invested, and the current market, the which is, means current value of investment which is just 4,57,000. So it means here was loss in the position basically. You can look at this. All right. So current, I'm holding the Yes Bank. There are other penny stocks as well, but most of the stocks which is in loss due to the border escalation tension, I would say. But so if I now talk about this facility, M2F facility, so you can buy security now by paying small amount, and that securities will be settled, means that securities you can exit, or you can maybe, let's say, you can just sell it out sell it out securities in market in future when you have profit in the particular trade. right? So if I talk about in this situation, I have taken the I have taken the loan from the broker to purchase equities, right? So when I have, let's say, I apply for a loans, broker offer me credit of around, if I click on this, see minimum margin, it was required 89,000 at that time, right? So initial margin, it means I have paid around 44,000 and taken loan of 58,000. So on this 58,000, I'm continuously paying interest payment. Okay. So if something happened with this trade, let's say my trade which is in loss, but there was a profit of 15,000, sorry, even 15,000 also, profit was there. The day before yesterday there was around 6 to 7 6,000 profit in my this particular trade, but due to this market situation, now I'm in a loss of 7,000. But apart from this, I'll have to pay interest payment as well. Look at this. See, continuously I'm paying interest payment around 15, 20, 21. So far I have paid 400 interest because I have taken loan from the broker. So every day I'm paying interest of 4 to 5, not 500, but if I just calculate for, let's say, May 9, so 23, 23, 23, 23 and 15, so around 50 rupees for per day. So almost 1500 would be for a particular month. And let's say for throughout the month, if I won't be able to, let's say, execute trades in profit, so I will have to pay interest as well as I'll have to also book the losses as well. So this is how basically margin works. But the main important thing is, guys, the collateral. So my collateral rights would be with broker. Why? Because broker has given loan amount to us, so it means all rights will be with broker. If something happened, right, if something happened, then broker can quickly sell it out securities from here. And that's what broker, when they offer credit to us or to any parties, broker take the collateral ownership rights, means the selling rights. If something happened in market, broker can quickly sell it out, that securities in market, right? This was the another scenario basically why people apply for loans on asset. See, if I talk about Elon Musk, what he did, the Elon Musk is the major stakeholder in SpaceX as well as Tesla. He wanted to buy another asset of Twitter X. So what he did, he just collateralized the stocks of Tesla Group with a bank, raised funding around 4 billion, and additional 40 billion asked for a different the partners to contribute funds, and and then transfer that 44 billions to the existing owners of Twitter, and took a control of Twitter account, and now the generating huge revenue. So that's how basically model works. But the point here is, when the Elon Musk placed the securities with the bank, then bank had a rights of sell that securities in the open market, and the Elon Musk was paying interest on that loan. So basically just a loan process, and in a loan process only you can see a role of collateral in the process. But now if I talk about, guys, the wording like the management, okay, so who manage the collateral? Of course the agent, like broker, who is working as a middleman between buyer and seller. So that particular party basically manage the collateral, take care of everything: collateral servicing, collateral documents, margin tracking, then collateral margin, let's say calls. So everything will be managed by the broker. And if you work with any broker like ICICI Direct, BNY, JP Morgan, Goldman Sachs, And if you join the collateral process, we will have to go through the same process and calculations what we have discussed so far. But you might see, on the ground there would be lots of, the complex calculations due to corporate actions, due to split, due to dividends, so on and so forth. But yeah, all calculations you will have to, take care of it, process in the system, book in the, the borrower book, lender book, and even the broker's book on time to time to maintain, the collateral accounting transparently. So you might see that. All right. But yeah, so in short, now if anyone asks questions to you, hey, what do you know about collateral? Collateral, it means it's an asset. So the assets, if you have assets, or if you want to see, there are two things with the assets, guys. One thing is you own asset. And another thing is you wanted to own asset. Third thing is you don't want it to own it, but you want to offer loan to someone on credit. Hey, I'm in session, please. I'm in session here. I'll call you. Okay. So Arey, I'm in session. I'll call you back. Yash is not with me. Okay. So if I talk about, let's say now, how the collateral, you guys leverage out that collateral. Look at this. You own asset. You can borrow money on asset, right? So if you wanted to own, or if you want to own, means you don't have it, but you wanted to own, or you want to own, now in this circumstances, what you can do, you can borrow money on assets, okay, and contribute your percentage or your small money, you can say your contribution, contribute your portion, and hold assets. Okay, this is the another case, and this one is lend money to the borrower on collateral and earn interest. So these are the ways to make money on idle collateral, guys. There are things where the promoters of the company sometime offer securities to the, for a security borrowing and lending as well. But maybe we can discuss that SBL, security borrowing and lending, in a next session. I don't want to mix up that. But yeah, they can also, generate some passive income from their ideal portfolio. But there's other ways to leverage the collateral. If you have your assets like property or gold, stocks, bonds, what you can do, you can simply borrow money on asset and do your business, generate profit, and return the money back and get the release of your collateral back. That is a one way. Second, as I said, the Elon Musk Twitter deal, what he did, he wanted to own Twitter. He borrowed money on asset, same asset, or on his even existing assets, contribute his own portion as well to hold that particular assets and now making money out of it. So you can also follow the same pattern, right? See, smart people, let me tell you something, smart people are investors without any single penny of their own investment, still they make money out of it. Why? Because they know it how to deal with investment strategies smartly. Sorry. Only the 1%, I would say, not rich people but traders, they deals in derivatives, right? But 99.99% in the poor people or middle class people, they deals in derivatives, okay? But let me tell you something, for a big people, they don't deal in any derivatives contract, they deal in the structured products like this, as I said. So acquisition of business, acquisition of assets, holding of assets, or become a partner in the business directly. So they directly hold the assets. And how they manage all of this, they raise funding from others. Let's say you are my close friend, you have a money, I'll directly approach to you, hey look, I have an idea, if you can contribute, let's say 1 crore, then we can operate this business model. See, whatever startups that we have in India, if I talk about, let's say, Zerodha, right? So, Zerodha also initially approached to his friends to raise funding. If I talk about Dream 11, recently the founder of Dream 11 purchased the property worth of rupees 131 crores, right? But in initial days, his friends only supported him, and even there was one lady, I believe, that lady supported that guy to kickstart this project, the Dream 11. If I talk about, let's say, Zepto, again the two friends, one was, means I think they were from IIT, and even they raised funding directly. But in most cases, what happened, guys? See, if you have a wealthy friends around you, convince them. If you have an idea, convince them, raise funding from them. You can officially sign partnership with that particular guy, but don't make a small vision. Try to build you know the vision, means big big vision first, and then whatever assets that you want to acquire, go and acquire assets, then do the business, generate some income from it, and repay the debt of your friends, as well as reinvest money to scale your business to the next level. So that's how the businessmen follow the strategy, and the common people like us, they follow the exactly reverse strategy. See, Ambani, Adani, they don't care about technical analysis. They don't even they check it the stock market, what is happening in stock market. They know it how to raise funds from the people. See, Ambani almost he has listed all his companies and raised thousands of crores from you guys, right? In a IPO only, we all have participated, correct? I'm sure you would have participated in IPO as well. So the businessmen basically, they come to you, monetize or collateralize their assets by raising funds from you directly for a business purpose. But there are more, the very intelligent who have raised funding from the people or family members to trades in derivatives, because someone from their the colleagues, they taught something, look, if you raise funding and invest in or trades in derivatives, you'll become a rich, so you should follow this, you should follow that. And that person said, reference link to that person, because if he trades more, then he'll generate some brokerage from the link. That's what he shared and convinced to you, and you just followed the same strategy and you lost everything. First, try to understand what you have or what you want to do. Why the poor people, they can't dare to scale their business, or let's say do their business? Why? Now your question would be, sir, look, I'm not that smart. See, at the initial stage, let me tell you something. Nobody would be experts at initial stage. Even if I talk about scientists, at very initial stage, maybe they would be like curious to know something, different, with the question mark like why I'm doing this, why I want to do this, why I want to achieve this, kind of that way. But the common people, they don't ask question like why. They directly ask question like how. If someone says, look, if you can open account and activate, let's say, derivative segment and do the trades, and even you can raise the money from the others, and they do the completely same thing, and after 6 months or 1 year down the line, only 1% people will survive, rest everything will die. And that same thing which is happening in the market right now, then you cannot blame to the market. See, even in a collateral, go and check the academics. So when we say collateral, it means in a collateral management, there are only theoretical definition and which are around only stocks. But those are not discussed in a very broad way. How the Elon Musk is using collateral to become a rich. How the Ambani is using collateral to become a rich or raising funds. See, if I talk about IPO event, guys, you will shock, but the IPO is all about they are collateralizing the company's assets and transferring rights to you and raising original, the fund from you guys. But in academics, you will not see that, the in-depth understanding of collateral. Collateral is all about, the meaning of collaterals are three. You own assets, then you can borrow money and do a business, multiply money, return your borrowed amount, and release your collateral. Collateral means, again, another purpose would be you wanted to or you want to own it. Right? So let me, you owned it, you wanted to or you want to own it, borrow money on asset, contribute your percentage as I said, and hold that assets. So if I talk about this example, see, I'm doing the same thing. I'm not owning this. I just wanted to, or I want to own, right? But what I did, I just simply paid 20, 30, 40% amount, purchased the securities, and now I'm holding them with a broker. I do not to pay big amounts. See, my job would be like to just, spot or identify good trades or good securities. All right. Good securities like, let's say, CDSL, NSDL, NSE, BSE, MCX, then defense stocks. I'll just find a good securities because those are assets or collateral which I want to own it. So what I'll do, instead of paying full amount to the broker, I'll just pay simply 10%, 20%, I'll hold it. See, I have generated profit, not a big profit, but from my every accounts, if I just talk about PNL. So there was 30 to 40,000 profit in my trades. Even I had booked it as well. Means this is something I have booked, day before yesterday only from the particular this trades, because couple of trades they were positive and I booked the profit. And I follow the same strategy. So around 2,61,000 profit which I have booked it in last year through same strategy. I know it's a very small amount if you compare with if you compare with, let's say, derivative trading, right? So this amount might seems very small to you, but which is fine. See, every year I'm closing my year with profit, and this is absolutely fine. The first year in 2022 there was a loss, means I had closed my accounts with 40,000 loss, but this is not something big. Last in 2021 there was a loss of only 1920, there is no trades. 2021, so look at this. So now if I talk about average the profit which I have made, so it means around 4 to 5 lakhs profit that I have generated in last couple of years. See, for you, I know that there are a couple of people, who are pro in trading, but if you ask them, hey, what about your PNL? Still they are in loss, or maybe they are just, trying to recover the losses from the market. But let me tell you something which is very brutal and it might hurt them. If you lose something in market, you cannot recover them. Maybe you can gain them. So don't try to recover. Okay, go and do the deep analysis of my statement. So if you lose, or if you let's say lost something, then you have lost it, agreed with it, then don't try to dig more with that particular trade, or with that particular trade or securities. Just get it done, close it out, and then jump on different things. And then maybe with a very fresh mind you can again do some research and try to get something out of it. Okay, but the point was around here only, guys. So if you want to own assets, so what you can do, simply pay some sort of amount, means small amount, and you can acquire the assets. And here, as I said, the last one is you want to offer loan. See, if anyone approach to you, don't offer loan directly. So what you can do, you can simply ask for collateral. See, let me tell you something. If you ask for a bank, let's say HDFC Bank, for 1,000 crore loans, what do you think? Bank will directly disburse loan to you? No. If you approach to the bank for 1,000 crores loans, then very next moment bank will ask for all your details, and if all your details are ready, let's say your KYC is good, business assets, everything you have, let's say in a good condition, then bank will reach out to the people like Adani, Ambani, and put a proposal that, look guys, we have a client which is looking for 1,000 crores. That client has assets of, let's say, this technology, and ready to collateralize with us. So your risk would be like 50-50, right? So what you can do, I'll contribute 100 crores, you can contribute, let's say, 9,000 crores, and we both can provide funding to that business, and we can generate good amount of money. I'll manage the account, bank will manage the account. So what it means, if you have a money, so you can offer as a loan to the borrower, and you can acquire the assets of borrower as a collateral. So in a market, see, now if I just conclude this, in a market, everywhere you can see the collateral, in a stocks, bonds, uh, even in a loan market, gold market, commodity market, in every market you can see the movement of collateral from one account to another account. And at a very, let's say, high level, the collateral, which is assets, so big businessmen, they know it how to capitalize their collateral or assets, and they capitalize even. So if I talk about IPO events, IPO event is all about collateralizing the company's assets. They just split into the small units, and that each units we can call it as a common stock, and those common stocks basically the companies sell it out in IPO event. So what it means, they basically transfer the collateral rights to you and raise funding from you. You get it? So collateral is a very broad term. Collateral is all about, if you have a collateral, whatever collateral if you have, see how you can try to leverage that collateral to build your business empire. Okay, all right. So this was all about, guys, collateral. So if you have any questions, please go ahead and ask questions around collateral. So any question, guys? Yes, no. Yeah, yes, Akshay, we can do that as well. But you can withdraw, it means you can transfer to other person. So withdraw, it means what exactly? You cannot withdraw like a cash. So you can withdraw, it means you can transfer to other person. That's how you can do it. Aryan, yeah, to some extent we can call it as a goodwill will be your collateral, but would be like synthetic product. Synthetic, it means there won't be any actual assets, but you can treat like an assets. And at goodwill that we treat. Uh, See, in India, like still, people need to grow or be mature in the finance. So, being finance professional, I would say I haven't seen this. Someone, let's say, have borrowed money on goodwill, but in US and UK, which is possible because they are very matured and smart, so they trades in everything. But in India, which is not possible. But simply see, guys, what you can do, I'll tell you. The all possible things I'll tell you. This might feels okay, sir is talking, very different topics and which are not relevant to the investment banking. You are from finance, right? You are from finance. So for you, whether you do your job or do your own business or you go and sit in bank and do a job. So what's the ultimate purpose for you? To generate money, to earn some, earn profit or to generate money, right? That's the ultimate goal. So we are from finance. Okay. So if I talk about any big bank or any big hedge funds, mutual funds, private equity funds, or even retail bank like HDFC banks, what all they are doing, just close your eyes for a moment and think for a while what they are doing. Come on. So what they are doing, raising money, offering money. Simple. And they are charging their commission, which is a service fee. Let's talk about Zerodha. What Zerodha is doing? Charging money. The investment banks like JP, Goldman Sachs, even if I talk about HDFC, Axis, all of the institutions, what they are doing? They are charging commission, they are charging fees. For what? Maybe they are helping to raise money, or maybe let's say they are offering money on behalf of their clients, and they are charging the spread. Spread, it means difference between borrow and lend amount. Let's say borrower want to borrow amount with 10% and the lender want to lend the money with 8%, so 2% would be the profit of bank, right? So now this model is very basic. So first you'll have to think what you want to become, whether it is a service provider or to raise fund from the other people or convince them to invest in your idea so that you can start your own venture. See, ultimate purpose is to make money. So banks, they are also doing same thing. They are raising funds from the people, they are investing in technology and businesses. So on your own you can also do the same thing. You can raise money from people, friends, family, or whosoever who may trust, and you can invest that in your ideas, right? See, as a large institutions, if they are doing the same thing, then why can't means you start it? There are two types of people. One, they feel that to build the build business empire like JP Morgan, it will take time. I know, of course, it will take time. Nothing will happen in one day. The JP Morgan is 200 years old venture. The founders who have started this JP Morgan, now they are not alive. All have gone, right? Maybe they're the next generations or next to next generations they're operating that business. But the point here is, finance, there is nothing hard, there is nothing difficult. It's all about, if you raise money, listen guys very carefully. If you raise money, whether you raise from bank through loans, whether you raise from friends, or whether you raise from your own, So you should be confident enough that you can generate the positive cash flow from the assets that you're gonna own it or that you're gonna acquire it. Simple. So that assets, it could be business, it could be stocks, it could be bonds, it could be so and so forth. As simple as that. So you should be confident enough. For example, let's say you have decided to purchase TCS Securities. First, understand this why you want to acquire it. Let's say you have decided to acquire TCS security of the value of rupees 10 lakhs, and you are expecting at least 20% profit on 10 lakhs. So profit would be somewhere around 2 lakhs for per right, for yearly basis. So what you can do, just go to the market, okay, convince to your friends, family, friends, or so and so forth, raise funding from them and simply invest in that particular assets. Then after, don't do anything, just wait, and you can continuously just go through the news. Because in a finance, what happens, see, the discipline is important, and discipline is a very precious thing. So cheap people, right, or novice people, they can't afford it, and they break the rules or break the laws, and they lost everything. That's the uh, you know means brutal again fact, I would say. So you can own the assets. Look, if your asset perform well and generate 20%, right, then if you look back, you have raised funding of 10 lakhs at a 10% cost, and you have a profit of 20%, which is 2 lakhs on the 10 lakhs rupees investments. So simply you can sell it out to investments, or sell your investment, you will receive 12 lakhs. So you can repay the the whatever debt you have raised, 10 lakh plus interest cost, which is 1 lakh. Still you will have a profit of 1 lakh in your pocket without doing anything. You just simply did research and find good opportunity and invested money in collateral. So this is what collateral it means. So collateral is all about, for you, it should be an asset which can offer you economic benefit in future if you hold that. Same with land also, you can do it. What you can do, raise funding from people, acquire land at promising location, hold for 1 or 2 years, right? Maybe you can raise funding from them at maybe 5%, 10%, 6% interest rate, invest it, and once you, let's say, sell the assets, so whatever amount you receive, first settle the or repay the capital which you have raised and interest payment to that particular person, and keep the remaining amount in your pocket. So then what you did in this, maybe let's say little bit from your side also your contribution is required, right? And in some cases even you don't require to contribute anything. See, there are properties which I have holded, means collateral, without paying even single penny. So this is how you can understand the finance in a better way. See, finance is not something to just going through the definition, try to understand the, hey, what is this and what is that. No. Finance and accounting, see, finance is all about to understand and try to apply the same principle or dogma in your practical life to do something. I hope you get it what I mean. Guys, any question? So you get it or not? Collateral means. Let me see if I have anything for collateral, so I'll send it to you. I'll share this exercise with you guys. You can go through it. Okay, read. So this module is more theoretical, but still will help you to, just go through the theoretical part, go through it. Keep aside the security lending and borrowing part. We'll discuss that in our next session. Security borrowing and lending. Security borrowing and lending, which is slight different from the normal collateral management. But yes, in SBL also you can see collateral of, collateral movement or collateralization. Okay. So let me know if you have any questions. If you don't have any questions, which is fine. So I have shared my, the personal YouTube links as well. You can go through it because, I personally record the sessions on different things and share with